Is now the right time to invest in cryptocurrency? Have you been keeping an eye on the ups and downs of cryptocurrency and thinking if now is the best time to get in? What if the right time to spend could mean the difference between a big win and a missed chance? We'll talk about the current state of crypto and help you decide if now is a good time to buy in this video. Are you ready to find out if now is the right time to start investing in digital assets? In the first half of 2024, the cryptocurrency market has already seen significant movements that have led to new all-time highs for Bitcoin and numerous other tokens. Like you, a lot of people are debating whether it makes sense to invest right now or if it will be better to wait till things settle down. Although no one can predict the future, there are tried and true methods to assist you in choosing the ideal moment to buy cryptocurrency. Know before investing in cryptocurrencies. Even now, over 10 years after the launch of Bitcoin, cryptocurrencies remain a very erratic asset class with large price fluctuations. A multitude of factors, such as macroeconomic trends, regulatory announcements, market speculation, and technical improvements contribute to this volatility. Thus, make sure you educate yourself about the particular cryptocurrency that piques your interest as well as its underlying technology, applications, tokenomics, and development team. Equally crucial is the safety of your financial investment. To guard against theft and hacking, use safe cryptocurrency wallets and reliable exchanges. Is Bitcoin a wise investment right now? Certainly, cryptocurrency is a wise investment nowadays, but only if you are aware of the hazards. Cryptocurrency assets differ greatly, just like stocks, real estate, or commodities do. You may be an early investor in a startup that eventually outperforms industry titans like Apple, or you could invest in an overvalued company that is struggling to create positive cash flow and end up losing money. Is now a good time to buy crypto? Should be asked differently. Ask yourself, should you buy crypto at all? Cryptocurrency investing demands subtlety. There are good and bad investments among the many different enterprises and tokens. Crypto is like the early internet days when a lot of businesses came up, some of which were leaders in their sector and others of which failed and resulted in lost investments. It made sense to include these companies in a diversified portfolio back then, despite the risks. Similar times are happening to cryptocurrency right now. Not whether cryptocurrency is too risky, but rather whether it's too risky to not be exposed to it is the true question. Whatever the case, one thing needs to be made clear. The cryptocurrency market is still very new and unstable, full of speculative activity, uneven liquidity, and cunning con artists looking to steal your money. The majority of investments fail, even if some have the potential to yield enormous financial rewards. Can I purchase cryptocurrency now? With cryptocurrencies, significant profits can still be made today, but timing and technique are essential. When Bitcoin first started trading in 2010, its price was about $0.10. It has subsequently increased by 999.9%, reaching an all-time high of about $75,000 in March 2024. There simply won't be another investment quite like it, I'll say that much. However, more recent initiatives using cutting-edge technology continue to surface with the possibility of yielding large profits. These new initiatives frequently develop novel approaches to current issues, provide fresh applications, or further the technological innovations of their forebears. For instance, non-fungible tokens, NFTs, have created new opportunities in digital ownership and art, while decentralized finance, DeFi, systems have completely changed the way we think about financial services. Blockchain technology keeps getting more and more traction in a variety of sectors, including gaming and supply chain management, opening up new investment options. You may still be able to profit from a changing environment if you keep informed and can spot interesting ventures early on. For the rest of us, there are two key ideas to think about when determining when it's the right moment to purchase cryptocurrency. Comparing timing and time in the market. There is a strategy known as time in the market, which involves holding onto investments for an extended period of time in order to make a profit from long-term growth rather than cyclical price movements. To do this, it may be necessary to make investments in assets such as Ethereum or Bitcoin, and to hold onto them for a number of years despite volatile market conditions. Consider the cryptocurrency Bitcoin as an example. Consider that you spent approximately $300 on a single Bitcoin in the year 2015. A significant increase in value occurred in December 2017, reaching almost $20,000. And if you had maintained your investment through all of the ups and downs, your Bitcoin would have hit an all-time high of more than $75,000 in March 2024. This would have been the case if you had held onto your investment. Holding Bitcoin over an extended period of time allows you to benefit from the general upward trend in the value of the cryptocurrency, even during periods of significant volatility. Making rapid purchases at a bargain and then selling them at a profit is an example of timing the market. Timing the market involves trying to anticipate changes in the market and profit from such changes. By using this strategy, it is required to engage in more frequent trading and to pay close attention to both the news and the events in the market. You might want to consider making an effort to time the Bitcoin market. It's possible that you bought Bitcoin at $10,000 at the beginning of the year 2020 with the expectation that its value would increase. By the time the year 2020 came to a close, you had tripled the amount of money you had invested by selling your assets, and Bitcoin had reached a price of $30,000. It's possible that you made an investment in Bitcoin when it was worth $40,000, with the expectation that it would continue to climb when you've seen it rise once more. In the event that, on the other hand, the price dropped to $25,000 in a short period of time, you would incur financial losses if you sold out of hurry or frustration. Investors who are looking for long-term growth and stability are more likely to benefit from time in the market, whereas investors who are looking for short-term gains and are willing to assume greater risk and active management may find timing the market to be more enticing rather than time in the market. Average dollar cost. Using dollar cost averaging and lump sum investments to determine when to make investments. A method of investing known as averaging of dollar costs is one that strikes a balance between timing the market and remaining in the market. Through the utilization of dollar cost averaging (DCA), which involves the allocation of a specific sum of money on a monthly basis, the requirement to target specific price points is eliminated. By spreading out the purchase over a longer period of time, this technique mitigates the risks associated with the short-term volatility of cryptocurrency prices. It is preferable to make a series of modest investments over a period of time rather than a single large commitment all at once. When you do this, you reduce the likelihood that you will be able to purchase a significant quantity of Bitcoin at its highest price, only to soon after see a significant drop in its value. This will allow you to calculate the average cost of your investment by spreading out your purchases across a range of different price points. It is possible that you may not gain as much money as you would have if you had invested more money at the optimal moment. However, it is also possible that you will not lose as much money as you would have if you had entered the market after it had reached its peak. Investing with dollar cost averaging eliminates the need for investors to guess on the optimal moment to make an investment, which makes it easier for investors to retain discipline about their investments. Market-affected cryptocurrency events of late. There were a number of events that took place in 2024 that laid the groundwork for the present bull run in Bitcoin. Because of this, institutional investors now have access to a more regulated and accessible entry point, which has significantly increased market trust and liquidity. This began with the approval of various spot Bitcoin exchange-traded funds (ETFs) by the United States regulators. A further significant element has been the halving of the Bitcoin block reward in April, which has resulted in a fall in the reward for miners and an increase in the currency's scarcity. When this has happened in the past, it has resulted in significant price increases due to the limited availability. Increasing consumer adoption, particularly among younger investors, and increased institutional interest, as evidenced by the entry of major corporations like MasterCard and BlackRock into the cryptocurrency space, will also be driving forces behind the demand for digital assets and their integration into routine business operations and transactions. As the year draws to a close, it is projected that the market will also be influenced by the presidential election that will take place in the United States in November of 2024. Regarding the regulation of Bitcoin, a number of potential candidates hold contrasting opinions, which might either result in the creation of an environment that is more hospitable to cryptocurrency or the implementation of rules that are more stringent. When everything is taken into consideration, these factors form a complicated but generally hopeful scenario for cryptocurrencies in the year 2024. Taxes on profits from cryptocurrencies. When it comes to investing in cryptocurrencies, it is essential to have a solid understanding of the tax ramifications. Profits made from cryptocurrency transactions are subject to taxation, and the form of these taxes can differ depending on the jurisdiction in which you reside and the length of time you have invested. Transactions involving cryptocurrencies are considered to be taxable events in the majority of countries, including the United States of America and Germany. These transactions may be subject to taxes on income, capital gains, or wealth. The manner in which gains from Bitcoin are taxed is largely determined by the length of time that you keep onto your assets. If you sell or exchange cryptocurrencies within a year of acquiring them, the earnings you make are regarded to be short-term capital gains and are subject to higher tax rates than long-term capital gains, which are taxed at rates that apply to assets that have been held for more than a year. This is the case in many jurisdictions. Because the cryptocurrency markets are so volatile, which can result in big gains or losses, it is absolutely necessary to make preparations for the possibility of incurring tax liabilities. To accomplish this, you must ensure that you have sufficient financial reserves to cover taxes on your profits. Should you fail to effectively account for taxes, you may find yourself with unanticipated financial burdens when it comes time to make tax payments. Every single transaction or exchange of Bitcoin is regarded as a taxable event in countries such as the United States of America. Furthermore, this implies that even if you trade one cryptocurrency for another, the transaction is considered to be a sale of the first asset and a purchase of the second asset, which may result in the imposition of capital gains taxes. Because of the multifaceted nature of tax regulations and the rapid pace of cryptocurrency trading, it is absolutely necessary to maintain a level of awareness regarding tax laws and to set aside funds in order to fulfill your duties. For the purpose of ensuring that you are able to fulfill your tax obligations and avoiding unpleasant financial surprises, it is essential to use efficient tax management and cautious preparation. If you're ready to stay informed and make smart investment decisions in the world of crypto, don't forget to subscribe and hit the notification bell. Join us for the latest insights and strategies to help you succeed.